webcast live for Elliott Wave Options. And if you've seen any of the videos that we've done in the past, the SPY updates, etc., you know, we have to show you this disclosure/disclaimer, and basically a couple things that the powers that be want us to make you aware of. Number one, we are not registered to give in the States, and two, because we have a lot of international viewers, we have a lot of international subscribers as well. Any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So with that, let's get forward. So what we're going to do in this live session is I'm going to talk a little bit about the market, where we are, give you a brief update from the last SPY update, and then we're going to open it up to see if you have any questions. We do our insiders meeting every Tuesday night, and a lot of people enjoy giving us their favorite stock symbol, and we look at what our indicators show for that symbol. So we'll do some of that, and then I can run some searches as well, see if I can find some case study considerations that you might want to follow along with and see how they perform moving forward. But right now, you can see that in the SPY update, we talked about how the word for the start of the week is doji, and man, we had another one today. So now that's 3 in a row. So we had back on the 26th, 27th, and 28th, 3 dojis, and you know that we're right underneath this resistance level of 420. I'm assuming that all of you have watched these videos in the past, the SPY videos. If by chance you haven't, and this is your first view of Elliott Wave Options, let me show you what we've been talking about for months and months, is this zigzag pattern going all the way back to last June when the wave 5 started, and 161.8% extension that we've been talking about since near the end of last year of 420 price level. Today we hit 419. That's awful doggone close to 420. And I've also talked about some of the things that are causing concern, the storm clouds that exist there. We are consolidating underneath a major point of resistance. 161.8% fib level is a major point of resistance. So with that consolidation under there, there's the chance that we could break to the upside and break meaningfully higher from here. But we also have to respect the fact that we haven't been able to break through it yet. And when we look at volume, you can see that there we go, 3 dojis in a row, 3 well below average volume days in a row. So when you have this kind of indecision, which the dojis represent, and then you have low volume connected to that, it just shows that the market has no idea where we go from here. Federal Reserve came out, Chairman Powell spoke for a couple hours, didn't say anything new. They're just going to continue the path. He talked a little bit about the economic numbers, etc. Things are a little bit better than
You still there, Rob? We just lost you. Looks like we've lost Rob. See if we can get him back in. Sorry, guys. I assume that you can still hear me. Not sure what happened there, but Rob is logging back in.
Am I back?
Yep, you should be able to reshare your screen, turn your video on if you can. Don't know what happened there. You just dropped. People are still with us though.
Okay. Well, thanks for hanging in there. I'm hardwired in, so I don't know what happened, but
You're back now.
all right. So I'll just keep on chatting. Anyone knows that that's watched before that I'm not at a loss for words. I can talk to markets for hours and hours. So just, I'm not sure exactly where the drop-off point was. I brought up the chart of the DMI that is showing that the ADX is moving higher. And we actually had, even though it was a low volume day, a tick up in the positive directional indicator. So I use an analogy with a lot of the webinars that I do of a volcano, where when you look at the volcano, you see the big cone, the mountain, and it's quiet, nothing's going on. But before a volcano erupts, there's all the lava underneath that's gurgling and heating up and getting ready. And then you have the explosion to the upside. The fact that we're consolidating under that 420 level leaves the fact that that's a possibility. We could actually break to the upside here and move up towards that 261.8% level. That would be awfully extended. I'm on record with our SPY videos of saying a move without a correction up to 420, I think sets up a pretty good short opportunity. I still feel that way, but we also have to respect the fact that the DMI is not bad, and we are consolidating underneath a major point of fib resistance. And if we break above that, then we could go up towards here. Now there's another zigzag pattern that we've been showing that's qualified, that maybe has a more realistic type of a target price. And that's from here. And you can see up around 430 or so, we could potentially move if we break above here, but that's not that much higher from here. I think the important thing is to focus on this DMI. Now, when I see a DMI that's like that, I want to look at the CCI. So these are the indicators. We have at ewotrader.com, our website, lots of educational information. We have a series called TradeScan, which has all of our indicators, a full webinar session, if you will, on each of the individual indicators that we use as confirming indicators to Elliott Wave. Obviously, with our name, Elliott Wave Options, Elliott Wave is our primary indicator. But no one indicator is the end all be all. You have to have, in my opinion, a set of confirming indicators to create your technical trading system. And I'm a big believer in having a system. You may have your own indicators that you feel that you know well and that work well and have good track record. Same thing that we do here at Elliott Wave Options is we have our set of confirming indicators, and then we use the results from that and apply Elliott Wave to it. So if we have a combination of both, so we have our indicators giving us strong signals, and then if the Elliott Wave pattern on top of it agrees with the directional movement, could be up or down, so it's not only to the upside, then those are the ones that we consider sending alerts out to our paid alert subscribers. So we send out alerts for entries, any adjustments, and exits. Not just entries, not just to get in. In the Trade Finder, we do case study considerations where we look at things that look good, but then you're on your own on how to handle it from there. But with the alert service, we actually give you guidance on getting in, making adjustments, and getting out. So with the market, that's not much else to say here, sitting right underneath this 420 level. And I feel like we called it. We've called it for a very long time. We had a lot of people comment on the YouTube videos that there was no way the market was going to go that high. And here we are. We sit right there with the high over 119, just barely today. So we haven't quite touched 420. And I usually say that often those fib levels actually get touched. But man, when you're less than a point away, that's pretty close. And last year we did an Elliott wave outlook for the year 2020, and that hit its target as well. You can go on our YouTube channel and go back and find that if you want to see it in the past. So those are the things that I wanted to share with you as far as where the market is. And we're one or two things I actually thought today was going to be a more meaningful day. And I even said that in the SPY recording because we had the two dojis back to back. Well, now with the third one and trying to get up there and hit that 420 level and closing back on the opening low, that's just basically 3 days in a row where we've had dojis opening and closing at pretty much the same spot. So we've had a little bit of intraday movement. That's about as indecisive as you can possibly get in the market. But you can see that we're right there, and a break to the upside, there's our target. Could go all the way up to as high as some people have been calling for 460. There's a lot of financial firms that have talked about a 460 level. I'm not sure exactly where they got that one. A lot of them were saying 420. We knew where that came from because that's our zigzag pattern. But I'm not sure where the 440s and the 460s came from. But the next 261.8, and I've been doing this for 25 years. I can count probably on one hand the markets, not individual stocks, but the markets or ETFs that have made it to a 261.8% extension, whether it's to the upside or the downside. So that's a pretty rare thing. So there we are. That's where we go. And we'll do an update on the market when it makes its break. Talk about it. See the 10-day moving average is right there in line.
Sorry to interject there, Rob. I was just going to mention, because we got off to a late start, we might want to invite people to put their stock symbols into the chat and see if they can give you a few additional things to analyze while we are watching your general analysis.
Thanks, John. That is John from Australia, by the way. And so if you haven't listened to any of our insiders meetings, you may not be familiar with them, but we are really international. As I mentioned in the very beginning, as far as the fact that we have a lot of international viewers and subscribers. And so John is helping us with support. I'm ready to take questions if there are any at this point in time. If you'd like to send in a question and talk about what your favorite stock is, and we can take a look and see what our indicators show with it. And if not, I can run some searches and find some to share with you.
Somebody's just asking if you can take a look at LUV. That's Don.
Southwest. So LUV.
We've got Facebook and Tesla, all the usual suspects.
Okay. We'll go through those. A lot of earnings after hours today too. I was going to talk about some of those. Apple, Qualcomm, Facebook. So some of the charts that we're going to look at aren't going to include the after hours pricing, but you'll see pretty good movements from there. So Southwest, we talked about this actually in our insiders meeting last night with this really good looking triangle pattern in a wave 3. So Elliott would be viewing that as a potential break to the upside. But when we talk about triangles, and big believer in triangles, I kind of made my name in options on a variation of a strangle strategy. It's not the normal strangle where you're one strike out of the money on the call and the put. It's taking delta and gamma into account and mathematically setting ourselves up to where if the stock breaks, so there's always, nothing's guaranteed, nothing's 100%. What we've done is set this up to where we're mathematically guaranteed to make money as fast as possible if the stock moves, but it still has to move. So there's no guarantee the stock's going to break out. Quite often they do out of the triangles, but you can't guarantee that it's going to move. But Elliott says when you're in a wave 3 and you have a triangle like this, the likelihood is that you break in the direction of the recent impulse. I view it as when you have a triangle, you have to respect the possibility of breaking either direction. So we could move up or down. So that's something I would share with that. I would look to do a strangle on Love. I think the airlines are, man, talk about being caught between a rock and a hard place, where they have the people just now starting to come back. A lot of the airlines are getting rid of it because they crossed out the middle seats, right? If you flew, and they didn't even sell the middle seats. Delta, some other airlines are not doing that anymore. And now they have oil prices that have gone so high, which is their number one cost. So I mean, I think this is a perfect setup for a strangle. I'm glad the suggestion was made because you can view it one of two ways, can't you? You can view it as the traveling public is going to come back. They've cut capacity down, so they're going to start filling up planes. And the fact that they have less capacity and full planes should bode well for the bottom line. But then, have they accounted for the possibility of fuel costs going this high? Have they hedged their oil and fuel costs? The airlines that have, and by the way, Southwest is one of those that does hedge their fuel costs. So they may be one of the ones that performs better than the other airlines in this era of potential inflation. I mean, I'm not supposed to say that word, right? Because the Federal Reserve says there isn't any, but I think there is. So anyway, that's a good one to look at. So what was the next one?
Facebook, Rob.
Oh, Facebook, yeah. So Facebook is so much higher after hours. Let's take a look at it. It just kept on going after hours. Kind of surprised a lot of the whisper number people. So I can show you where we were at the close, and then I'll give you, you probably already know this if you're asking about it, but you can see the wave 5 target is at 335. Well, we hit 328 in after hours. The current trade is at 326. That's as of right now. So that's 326 is the bottom of this. 328 would be right there. So you're within the tap box. And for those of you that may be curious as to what software I use, this is Profit Source. It's created by the Hub organization. They are an international company. You can find out more about it at profitsource.com, just the way it sounds. No fancy characters or anything, just profitsource.com. To me, I've been trading Elliott. I've been trading for 25 years. I've been trading Elliott Wave for 20 years. So for the first 5 years, I experimented with a lot of different systems, had some success, had some failures, pretty much the same way everybody gets started, right? You make some money, you think you're God's gift to trading, and then you lose it, and you're like, why did I ever start trading? But stayed with it, and Elliott Wave is what propelled me into having a successful career as a trader. So with that as a background, I've looked at every Elliott Wave software program that I'm aware of that exists. There may be more, but I've looked at all the ones that I know of, and this one is the best. I know the programming is direct from Elliott's algorithm itself. That's how it's programmed. There's some other Elliott Wave softwares that have variations that individuals have concocted, but this one is just pure Elliott Wave. So if you want something that is absolutely as pure to the Elliott Wave mathematical algorithm, which is, I'm not a math guy, but when you look at it, all those formulas and stuff, I go back to the movie Beautiful Mind with all that stuff that was written all over the chalkboard and everything. That's what it looks like. That's what the formula looks like. But so there's where we are with Facebook. And so the question becomes, how much more is there to go now if we're already within the tap box? So the wave 5 target is exactly at 335, but this window is your target range. So we're going to be in there if, and I mean, we've ticked down a little bit and turn around and come back up. So I would be shocked if we didn't move into that area. Talk about this a lot people ask questions about, do you hold position? We don't have a current position. We did have a bullish position on Facebook, and we took it off a while back before this wave 4 correction occurred. But people say, do you hold positions through earnings? I've always been a believer, based on my past experience, that more often than not, now more often than not doesn't mean every time. When earnings reports come out, they move to the direction that the LA Wave program was already showing, or the LA Wave forecast. And after hours tonight has really held that up with Facebook, Qualcomm, Apple. So we'll look at Apple as well. But anyway, the bottom line is, where do we go from here? Note that we had a doji today. So there was indecision going into the earnings report, but it was a great earnings report, and so off we go. So let's look at Apple and see that, and I'll share that with you. Apple is hit 139 after hours, so it was down on the day. We look at the pattern here. The key was, and we've been talking to our subscribers about this, we needed Apple to break 135. It's been stuck there for a while. You can see its support and resistance going back to the end of last year. So we're sitting there, and now we're going to break above it. So we got as high as 139 in after hours. And for Apple, that's big. They announced a massive stock buyback program. So it's hard to imagine the stock going lower from here with that on the horizon. So got as high as there, but currently it's trading at about 137. So we're kind of about right there. So the key here is Apple is going to break above that resistance area at 135, which has been the problem. And it would be nice to see, considering the ADX is below 30, to see this positive directional indicator break back above the ADX. That would give us some momentum to the fact that Apple has more room to run. It would be hard to find something negative with Apple's earnings report. It was pretty stellar. Were there more?
Yeah, there's a ton, Rob. So we might have to get through them a little more quickly. And also, if I could just ask anybody out there who's watching the live stream to give us a like if you can. Obviously, it's the first live stream. We've had a few technical issues, but we're starting to get there. So we appreciate the likes. Now, the next one is the triple Qs. So if we can have a look at the triple Qs and Tesla.
Tesla, I forgot. You did tell me Tesla. So I'll talk about Tesla in a second, but here's the triple Qs, which is interesting. It had a pretty good run, but it hasn't been completely, but it's now kind of in concert with the SPY, right? Because we've had this pause here at fib resistance. And when we look at the Qs, we can see the same type of thing, but look at the difference. What's the difference here? Can you see it? The SPY is in a wave 5, but when you look at the Qs, it's in a wave 3. So if you are bullish on the market, if you're looking for the market to go higher, you can certainly look at that and say, that's a good sign, because tech has been the bellwether for the past year, right? I mean, that's what's been leading the market. And tech went through a pretty good correction. A lot of the big tech stocks had a correction. They're coming back to life now, especially today with all the earnings reports after hours. Google yesterday. So that would be a pretty good signal that if we break to the upside on the Qs, it would be hard to imagine with Facebook, Qualcomm, Apple. With all those earnings tomorrow, if we don't break above that resistance, that would be probably not just surprising, but a very bad signal. But it might help propel the market to get above that 420 level as well if we start to see some leadership come back from the triple Qs. Then you can see whether the DMI, but look at the DMI a lot. So we have several confirming indicators, but my favorite one is the DMI. That's the one that I look at the most often. And so I shouldn't say I look at the most often. It is first in line when I'm looking at it, the indicator. So I guess it does count as most often, because sometimes after you look at that, you don't even bother looking at the rest of the indicators. If that one doesn't coincide with what we're looking for, then we move on. And the ADX has been curling down. It's really odd to see the ADX moving down like that, but then still staying between the two directional indicators. I mean, that usually doesn't work that way. That's really odd to see that occurring, but we'll see how that plays out over the next couple of days, especially tomorrow. If we break it back above that, the ADX turns up, the positive directional indicator turns up, the negative stays down, all of a sudden that's a whole different scenario. So the CCI is one that I look at for very short term. It's super sensitive, day to day it moves. And the scaling over the right is misleading because that's different on every single stock. But the important thing here is it's moving down towards zero. So that's still the starting point. But some stocks can have a high point of 400 or 500. Some can have a high point of 200. So you have to look historically at what the stock has done with the CCI. But for now, point is there's plenty of room to move to the upside there if it wanted to. So Tesla, sorry, not doing a good job of moving. Not doing a good job of moving quickly.
But while you're there, you should thank everybody for the likes. We've got a ton of likes, so we appreciate it.
Thank you for the likes. We appreciate that. I didn't know this is a test because we're like, is there an interest in this? Would you like us to do that? I mean, we can even morph this into doing live sessions during the day when the market's open. There's so many things that we can do if there's interest there. I mean, that's the bottom line, right? So by giving us likes, you let us know that, hey, yeah, I am interested in that. So thanks for telling us that, John, and thanks for your likes. We do appreciate it, and it gives us information for us to share as much information with you as we can. One thing that you'll note is I'm long-winded. So I'm working on it, not very successfully. But when we look at Tesla, we can see that we had this big triangle pattern here, and we have broken to the downside, even though they crushed earnings. Honestly, they had a really good earnings report. So Qualcomm, Facebook, Google, Apple, all had good earnings reports, and the stocks went significantly higher. Tesla had a good earnings report, and it looks like we're breaking to the downside out of the triangle. So when we look at a breakout, it's very important that we see a second day, a follow through, a confirmation day, meaning that yesterday is meaningless by the way that we do our technical system. One day can be a head fake. It happens all the time. We share that with our subscribers. You get a big break one direction just to suck everybody in and think, oh man, we broke out, they had earnings and they're moving lower or they're moving higher, whichever one, and people pile on, and then you get a reversal and you go back to the upside. That doesn't happen nearly as often when you have a second day, a follow through, a confirmation day. Usually that is the direction that the breakout continues. In other words, now that we've had a follow through to the downside, it's less likely, but not zero chance, right? Anything can happen, but it's less likely now that that's a false breakout to the downside, and then we turn and go higher with Tesla. At this point, it's likely that we continue lower. So that's the importance of having that second day or follow through day. So the stocks that you guys are asking about are really important. So what's the next one?
The next one is GGB, Rob.
GGB. Okay, I am gonna start going faster because we have limited time based on, man, we didn't know whether anybody was even gonna show up or be interested in this. So, wow. Vertical move to the upside there. All right, so the ADX is getting above 40, which is to the point where it looks like the strongest part of the move is over. But I really try hard to clarify that when the ADX shows that the strongest part of the move is over, it doesn't mean the entire move is over. Just because the strongest part is over, it can still go higher. But as it goes higher and it's weakened as it goes higher, then you're more susceptible to the correction, like this is in a wave 3, moving to a wave 4. Now, my concern here is that's what I like, 45-degree angle. those are the patterns that hold. You don't have violent corrections. You get these little back and forth corrections, as you saw here. I like a stock that moves forward in a 45-degree angle. When it starts to go more vertical, that's when I get nervous, because what goes straight up quite often comes straight back down. So my concern would be this coming back to the downside. But we did identify this stock in our trade finder, and I know this isn't one you all ask about, but this was identified based on the momentum scan that we created within Elliott Wave Options. And so it just shows that nothing works 100% of the time, right? Because when you look at that, you're like, that's gone vertical for a month. It's gone vertical for an entire month. And I would have hated it the whole way up. I would have gotten out much sooner than where we are now based on that move. So I just wanted, I try to be fair, basically. And, you know, I've been doing this for a very long time, and I know you're going to be right. I know you're going to be wrong. If you're right more than you're wrong, and you do the right thing with your adjustments, you're going to be successful over time. That's just the way it is. There's exceptions to every rule. I don't like stocks that move vertically, because quite often they come straight back down. I still feel this one will come down, but boy, wouldn't you have loved to have been in it back down here around 12, and now it's at 21. It has gone basically vertically up that far. It just makes me nervous. There's no way I would have stayed with that all the way up there. Just when we identified it, we did it as a trade. You go back and look at the trade finder recordings. You'll see it on there, BAK, and then you'll see the week when I said take profits. You know, that's, if you're not taking profits now, you're greedy. That was probably half the move to the upside. All right, so sorry about that. I just wanted to throw that in. What's the next one?
Rob, there's a couple of people asking about silver, the comment that silver is trending on the internet today. So I thought that might be a good one to look at. And also we've got, you know, Bitcoin and Ethereum. If you want to look at those, I can give you the codes.
Okay. So here's silver. And boy, we've talked enough. We've traded silver more than gold. We actually aren't in silver right now, but we are in gold. Silver has been the leader. And we talked about this. I actually included this in the last SPY update, where 24 is the important level. It has to hold it. Well, it did today, didn't it? Look, I mean, this is spot on from what I said last night in the recording. We opened, we trade, what's the low? 23.97. And then it closed to the upside and closed on the high of 24.40, which is the exact high of the day. So it just shows that 24 is really important. That surprises me a bit with what's going on with interest rates. I feel like interest rates want to start to sneak back to the upside, and that hasn't been good in the past for the metals. But there's your key. So whoever asks about silver, you got to watch 24. As long as you stay above 24, go long, and go long hard. But if you break below 24, anything can happen to the downside. We've got support at 22, but if that doesn't hold, we could go significantly lower. So that's it. 24 is your key level. You can stay long above it, get out if it breaks below it. That's the bottom line there. So Bitcoin.
Just missed the C there from what I can see.
No, there. Sorry about that. Big back to the upside yesterday. We talked about this in the recording last night as well. Here's the keys. Very easy keys on Bitcoin. So this is, in my opinion, since Bitcoin started, this is the easiest trade that you've had yet. Support is right there at 48,000. If it holds that, you stay long. Resistance is right here at 60,000 with that gap that would be filled at 60,000. It doesn't get any clearer than that from a technical standpoint. So above 48,000, you stay long. If it goes above 60,000, you go long hard. If it breaks below 48,000, get out. It's as simple as that. If it breaks below 48,000, get out. We're coming all the way back down here. we'll be back down to 30,000 if it can't hold 48. But so far it has. Looks like it wants to go up and close that gap. So once you get to the gap, so if you're long right now, your key is when it closes that gap, then what happens? Well, if it can break above 60,000, you know, pad your bets, whatever. So press them and go long hard if it breaks above 60, because the next level is 72,000 is where we're going. But it has to get above 60 for that first. So 48 and 60 are the levels. It's simple right now. It's the easiest trade of Bitcoin that there's been, in my opinion. So,
and thanks, Robert. The Ethereum code is FXETUS, but the guys were just telling me if you've not loaded it up before, you might have to do a symbol maintenance. So if it doesn't load up immediately, we'll look at that next time.
Okay, FX, what was it again? Sorry.
ETUS.
Yeah, you know, it's funny. I actually was thinking about that earlier today. That's one that I'm actually more interested in Ethereum than I am Bitcoin, and I thought about that earlier today. So I apologize for not having that loaded in. I will get that done, and the next time we do one of these, I'll have it loaded, because I think, man, I think they're the future. I think they're going to eclipse Bitcoin. Personal opinion.
So then the next question is XLE. Somebody's asking if there's a breakout today.
Yep. That would be your classic breakout symbol. So when we look at the LA wave, so the wave 4 came down. I would have preferred, see, this is the stuff that gets you, right? I would have preferred the wave 4 would have come down and filled that gap. So if it makes it down to 45, it fills that gap, it hits the 38.2% fib level, and it's just perfect, right? I mean, it is the ideal entry. I talk about this a lot. The market rarely gives you the perfect setups, the perfect scenarios, but that would have been one of them. You come down here to 45, you fill that gap, you're right at a 38.2% fib level. You could have gone long and felt very comfortable about that. It didn't get there, and it's still moving to the upside. And you can see the 10-day is about to cross the 30. So if you haven't seen my charts before, the lime green line is the 10-day moving average. The fuchsia colored line or pink colored line is the 30-day, and the royal blue line is the 50-day. And a lot of people look at a 10-30 cross for directional trading, whether it's bullish or bearish, depending on what direction the cross is. So the 10 hasn't crossed the 30 yet, but if that holds, that breakout holds, and the energy sector moves, see, that's plays right back into Southwest, right? So if energy and oil are going to start going back to the upside, how do the airlines handle that? Hopefully they've hedged. We'll find out. But yeah, that's it's a breakout day today, but I go back to remember, you have to have the confirmation or follow through day. So tomorrow becomes key there. So we broke out today, but it has to have the follow through a confirmation day. If it does, then the XLE is probably off and running, and that would be good for the markets. Not so good if you fill up your gas tank, but good for the markets. Next one.
All right. The next one is WKHS.
Oh, I haven't heard about Workhorse in a while. We used to get this one asked in Trade Finder as well. Holy cow, what a consolidation pattern. What was that? Oh, see, that's why. For those of you that may be new to LA Wave options, when we look at this and we do the strangles, and mentioning the triangles and the strangles is how I kind of made my name in the world of options. Actually, a publisher contacted me about writing a book about it. Is a low ADX, because that tells you the stock's getting ready to break out. And you can see how long this has been consolidating. So we've had a descending triangle pattern here going back to February. And there's your series of lower highs. Bit of a doji today, so maybe we're getting close. But all of that consolidation, See, the reason that that hasn't broken out yet is the ADX was just too high. So when the ADX dives below 15, and we really like the 13 level, but when it gets below 15, we start to look at it. And so when we get down here and we start to get the setup for a potential breakout, the ADX is kind of the signal that tells you about when you're going to break out. And we're getting awfully close. You can see it's almost to 15. So when there's tons of consolidation patterns, I change the level down to 13. When there's very few, I'll look at 15. But I really prefer to put a strangle on any triangle with an ADX at least at 15 or below. But we're getting there with Workhorse. That's really, really interesting considering where it's been before. I mean, we actually traded this before and did well on it back here on this move to the upside. And I this one has not been on my watch list, but wow, that's awfully interesting again now. I can see why the question was asked. Good
Thanks,
one. I'm
Rob.
actually going to put that on my watch list now.
Thanks,
I'm
Rob.
old
The next
school.
one is The next one is AMD, and while you're putting that
Oh,
on your watch
AMD.
list,
I knew that was coming. I was going to beat them to it. I knew that was going to We get that ask
well,
every time.
while you're putting Workhorse on your watch list, I might just mention to people, if you're enjoying what Rob's doing here, please don't forget to like and subscribe. And I've also just put in the chat a link to Trade Finder that Rob does for free every Tuesday, which is similar content that you can subscribe to and be notified of. So back to you, Rob, and AMD. Thanks.
Great. Yeah, thanks, John. And yeah, just to reiterate, what we do in Trade Finder is we actually find case study considerations where we do a search. This has been fun because it's been interactive and you've given us the symbols, but we do that on Trade Finder in addition to we show you what we do on a daily basis and look to find and go back and we've added subscribers to our alert service that said they've gone back and looked at the trade finders and followed along with the trades, and they were so impressed with the results that they became alert subscribers. So they follow along and do that. So here's AMD, and this is, you know, we talk about how you just don't know how the market's going to react to an earnings report, right? It is my belief that if you have a good Elliott wave pattern, more often than not, the earnings report comes out and the stock moves in the direction of the pattern. Well, we don't have an Elliott wave pattern right now in AMD. We came down here, we've got a ton of support at 75, which needed to hold, and it did. And we had some resistance here at 85 that it tried to break out. And you would be hard pressed to find, I mean, I talked about how good Facebook's earnings report was. It was a really busy day today, checking out all these earnings, but you would be hard pressed to find a better one than AMD. I mean, it was stellar. They raised guidance. They did everything you can think of. And the stock just is down in after hours trading. So if it holds there, we're going to open again below 85. So notice that we broke above it on the 26th, so 2 days ago, no follow through day. You can see where we opened today and then traded lower, and then they just blast earnings, destroy earnings, and the stock just can't get any love. It's falling back down. So there's your key. Just like we talked about Bitcoin with 48,000 and 60,000, your two levels with AMD. And a lot of people ask about, and I'm amazed how many people ask about AMD, but it's constant. Support 75, resistance is 85. It's as simple as that. Go long above 85, go short below 75. And if maybe it turns around, maybe it catches a bid tomorrow. But that's the level they need to talk about. But man, they had a great earnings report.
Thanks, Rob. And Michael is asking if you can have a look at CPRT.
ST?
No, C for cat. CPRT.
CTRP.
No, CPRT. Sorry.
CPRT. Okay. Well, a lot of these that you're asking about these are kind of easy reads. 125, is the key. We've had a pretty significant move to the upside. The positive thing is that you had a fairly vertical move, more vertical than I would have liked. And when things happen like that and you start to separate from the 10-day moving average, either the stock comes back down to the 10-day moving average or it goes sideways and allows the 10-day moving average to catch up. One of those two things is going to happen. Absolutely going to happen. That's one of my trading rules. That's not a guideline. That's not a sometimes. That is a hard, fast rule. And in this case, the positive thing is it ran up and it just consolidated over 125 and it allowed the 10-day moving average to catch up. So if it can break above 125, you go long really, really hard. And if it falls back down, you really don't have any good support because of the vertical nature of the move to the upside until you get to 105. So if you can't break above 125, then you get a little bit less interested. But if it can, then it's got clean air and it can really run.
Thanks, Rob. And the next question is actually IPW. I think it's an recent IPO, so there might not be much data there as far as tech analysis or, yeah, I don't know that you're going to be able to do much with that. So we might move on.
Well, it has a symbol, but no data. So, all right, brand new.
Okay, so
let
the
Reuters
next
catch up.
one, you've already done Apple. How about Gary is asking for ARDX?
Boy, so talk about some intraday volatility for an $8 stock. You like to see that. It's in a wave 3 higher. Here's the thing that concerns me. So we're at resistance, right, at 9, which is exactly where it closed. That wouldn't be too concerning if the ADX, or excuse me, if the positive directional indicator had turned back up. But you have a big day like this. What's the volume look like? Yeah, decent volume. You have a pretty good day on decent volume, and for some reason, the positive directional indicator moves lower. You would have wanted that to turn higher, but maybe it's just because it feels like we're going to have some consolidation here. But that's another one. If it goes above 9, then you go to 10.5 pretty easily. But it's got to figure out a way to get through 9. And right now, the DMI is not being very supportive of that move.
Thanks, Robert. Gary's also asked about Amazon. I don't know. Did you already touch on Amazon?
I didn't talk about Amazon, but it's definitely moving. And the key thing here is it's breaking above this area here that we've been talking about at 3,400. We talked about that last week, I guess, or maybe even on Tuesday night's Trade Finder. Needed to get above 3,400 and continue to move, and it's trying to do that. Now look at the difference in the DMI here from this one versus what we just looked at with what was the one we just looked at? But this is what you want the DMI to look like. So the ADX is moving to the upside. So is the positive directional indicator. You've got the separation between the two directional indicators. That looks really, really good. And then when you look at the CCI, you still have room to move. Historically, the extreme highs are still well above where we're currently trading. I've just felt like Amazon really wants to run. And then you look at it, and hopefully people that have been following along are seeing, is that a zigzag pattern? Well, let's see. I don't know if that's enough of a correction, but that started the impulse for sure. Yeah, pretty close to the 38% level, which would bring us up to 3,500. So Amazon looks like it wants to continue to run. So Amazon looks very good. Very good.
Great. Thanks, Rob. And Aditya is asking if you could have a look at EXPE.
Expedia. Well, you would think that they're going to break out, wouldn't you? With the fact that people are going to start traveling again. It has to have been tough for Expedia and Priceline, et cetera, with such limited travel, imagine they've streamlined their own business models as well. But here's the key at 180, right? So the problem is we're in a wave 5 pattern and we hit the wave 5 target. So when that happens, what we do is we look at where are confirming indicators as far as the potential to extend either a wave 5 or a wave 3 or a C wave in a zigzag pattern, etc. And it looks like it's trying to build, but it's not there yet. So the ADX is curling up. You're getting some separation between the directional indicators. It's trying to build, but we have to have that ADX break above 20 and be between the two directional indicators. But as far as just for pure price, 180 is the key. If it breaks above 180 with a follow through day, Expedia could be off and running. And again, you could make a fundamental case for that, couldn't you? With the fact that people are going to start traveling again.
Thanks, Rob. And the next one, well, I guess we'll go to TLT. And I'll just say, while you're bringing that up, Rob, I know we made a late start for some technology issues, so I guess you might want to run for another 15, 20 minutes. There's quite a number to get through. For anybody who we don't get to their questions or their particular symbols, please make sure you subscribe to the channel or like this video, and you'll be alerted when we're doing this kind of session next time.
Okay. Yeah, it took us a couple minutes to work out the technical kinks. That's not my forte. Internet and tech stuff. Here's TLT with it's at 23%, so it's right at the first fib level, right? The first fib level correction. So 140 being a key level here. If it breaks above that, then watch out. I look at TBT a lot, which is the inverse of TLT. So TBT is the short, where this is the 20-year. TBT goes short, the 20-year. So it's the exact opposite pattern. But looking to the downside here, let's put in. Let's see what happened with the two other ones as well. T and X. So those look like they were breaking out. We talked about this in the video last night. So there's the 10 and the 30 to go along with the 20. Interesting that these two seem to be in a better position than TLT does with the 20-year. I don't think that's going to stay that way. So I would look to see, maybe based on this doji here, and a pretty good line of lower highs. So you can clearly see we've got a nice ascending triangle there. That TLT breaks back above that 140 level, and then it can run. But it has to get above 140, and based on TNX and TYX, seems like it will. Just a bit of odd trade for TLT over the past couple of days.
Thanks, Rob. And the next one is the IWM or the Russell. I know you updated, I think, that in your update last night, so you're probably up to speed on that one.
I did. We talked about that and talked about a couple of things here. Number one, I said, well, does IWM think it's back to January? We talked about this back in our January recording on the January effect. And one of the pieces of the January effect is that small caps tend to outperform in the month of January. Well, they certainly did this year. As you can see, there was your run. Boom, a little bit of a correction at the end of the month, but a pretty good run on small caps for the better part of January. And then we look at this and there's some concern here, right? Because this is a bit of a head and shoulders pattern right here. So you've got the left shoulder, the head, and then this is where the confusion comes in. That part looks classic for a head and shoulders pattern. And then we came up here and we're coming back down to the neckline, but then it moved back up again. And so you can clearly see where the neckline is, but an argument could be made that, well, that was just a little bit of a blip in the road there, and we're right at the peak of where the left shoulder was. Hard to argue with that point, even though it's not a very classic setup for the right shoulder at this point in time. So here's the end game here is 230. If it breaks above 230, then the Russell is off and running and it's leading again. If it can't break above 230, then it could get nasty for the small caps, and that wouldn't be good for the market because a lot of people believe that financials lead the market. A lot of people believe small caps lead the market. So there's a lot of conversation along those lines. But this is the bottom line here is you measure from the neckline to the top of the head, and if we break down below 215, then you measure that same distance from the neckline to the top of the head below 215. That's your target to the downside. So you can see that'd be pretty ugly. And isn't it interesting that that would also be right about where filling that gap is? So if you're long the market and you want the market to continue higher, you want to see IWM break above 230. That's the key.
Thanks, Rob. The next one you'll also be familiar with, Palantir, PLTR. Ricardo's asking if you could take a look at that.
Yeah. And it kind of feels like this one wants to do something. If you look at it from a pure standpoint, you have to say, well, we got a triangle here. So you got to respect the potential to break lower. And you can see that the ADX is diving down and we are just right at that 13 level. So what this says historically, which is part of our system on creating triangles and breakouts, is this one's getting close to breakout. That's historically what happens with it, but it can go either way. If it breaks to the downside, the scary part is see how vertical this run was higher? Well, when it runs vertically higher, that means it can run vertically lower. But from here, this move to the downside there was also vertical, which means a breakout to the upside could also really run. Bottom line, this looks like a great looking strangle setup. So that's another one that, I mean, this is already on my watch list, but just so you can see that when I'm looking at stuff and I write things down, it's already on there. But yeah, that looks like that could be a really, really good strangle setup because there's significant room to run in either direction when it breaks out. And I don't think we're very far away from that with the ADX now down to 13.
Thanks, Rob. And people are just asking if you could have a look at General Motors, GM.
GM, so some old school people. And GM has also got a pretty decent triangle. Ford reported after hours today, and they actually had a good earnings report, but complained that they're having trouble getting parts. You know, they're going heavily electric. So like a lot of companies are having trouble getting chips, things like that. So they could have done a lot better if they would have had more parts available. So that hurt the stock, and stock was actually down a little bit after hours, but it's a good problem to have, right? That you could sell more stuff if you could get the parts. Frustrating that you can't get the parts. And GM is kind of starting to do that too. I mean, everybody is now, right? I mean, everybody's morphing into the EV world, electronic vehicles, so electric vehicles. But the issue here is GM had a pretty nice move here, then went sideways. But historically, is this a really big mover? You know, it's moved some. I just feel like this one's on the fence as far as whether or not you would actually want to do a strangle on this. You can see the ADX is diving down, not quite down to 13 like Palantir was, but it's awfully close. So Elliott, this is one where Elliott would say, now you protect both sides because you have a wave 5 high, and in this case, the wave 5 high hit within the tap box. So now he says, okay, now protect both sides. So I think that you do that as well. I don't like the triangle as much as Palantir, but it's certainly not bad. If for somebody that's looking for where's the directional move, which is probably why the question was asked, when you have a triangle, I'm not going to pick a direction. I'm just not going to, not historically, but I can tell you 55 is support. So if it breaks to the downside, it needs to hold 55. As long as it can stay above 55, it has the ability to go higher. And even though we got within the tap box, we can still get up to 67. That's still potential.
Thanks, Rob. Bruce is asking if you take a look at Twitter, TWTR.
Good old Twitter. This is kind of telling you something as far as the market as well, right? A lot of these stocks that people are looking at are all in triangle patterns. So kind of staying with the theme of the market being in an indecisive mode with all these low volume dojis right under resistance. Market doesn't know what it wants to do. And we got a lot of stocks that are in these consolidation patterns. Now, this one, Elliott says is going to go higher, because we're at a wave 3, and the wave 4 corrected to 38%. We've corrected into a really nice triangle, good set of lower highs and higher lows. The ADX didn't quite make it to even 15, and it started to turn up, and you got a doji today. Twitter may break tomorrow, so you may see a significant move out of Twitter tomorrow. When do they report their earnings? Did they do it already? Earnings coming up? Let's see. Tomorrow. That ties in well, doesn't it? So we'll see what you can actually put earnings on the charts there. So we'll see what it says tomorrow. So it's pretty funny that I said it looks like it wants to break tomorrow and they report earnings tomorrow. I found that pretty funny. So, if you follow pure Elliott, you'd say that it's likely to break to the upside. You've got a great triangle with a doji at the point of the triangle. I still feel more comfortable from a trader's approach to cover both sides and do a strangle. I don't know if you get that opportunity. Is it before or after? It's after market, but you have to do some analysis on IV and how much juice has been put into the options going into the earnings report on whether it would be worth it or not. This late before an earnings report, right before it, they pump up the volatility, and then as soon as the earnings report comes out, they take it out. And even if you get a breakout, it can be difficult to make money on the strangle. But yeah, let's see what happens with Twitter tomorrow. I'm gonna add that one to the list just out of curiosity. My opinion, I think it's too late to do anything with it, but it's gonna be interesting to see where it breaks. Next.
Thanks, Robin. Before I give you the code, I'll just remind everybody, if you're enjoying this content, don't forget to subscribe or give us a like. And I have also put a link in there for the Trade Finder event that Rob does every Tuesday if you want to catch up with him on a regular basis. Rob, Deep Patel has asked if you could have a look at XRP.
XRP. Do we know what exchange that trades on?
Hang on, I'll have a quick look for you. Oh, it's a crypto, so you won't have it unless you've done a symbol maintenance. So we'll have to skip on that one and do them next time.
All right, we'll add that one into then. Okay.
Apologies, Deep. So we might move on. And I'm just looking through. We've already done Palantir. What about SPLK?
Splunk. So there's good and bad right here, right? The bad is yesterday it broke a very important support level at 130. The good news is it didn't get a follow-through day today. So if you're long the stock, so we're already in a wave 5 to the downside, but we only went to the 23% fib level on the wave 4. And you do have a gap here. That's probably the most bullish thing I see here, and that ADX is not sitting up well. So here's the key. 130 is the key. If it continues to break down, you could go down to 105 is the wave 5 target. Right there, 105, anywhere between 115 and 90, basically, but 105 being the midpoint. So you want that to get back above 130 really quickly. That's the key. So that was a major support level. Rough to see it broken yesterday, but at least it didn't follow through today. So that's what you're watching for. You can stay long if you get back above 130. If it doesn't, then you might want to consider flipping it and going short.
Thanks, Rob. I know we're well over time, but how about we do a couple more? Are you happy with that?
Sure. Yeah.
All right. Let's have a look at Home Depot HD, and then maybe DraftKings to finish up. How about that?
Yeah, that's, DraftKings has been a good one. So Home Depot, obviously playing off of what's going on with home builders, right? Just an unbelievable run in the wave 3. So the ADX, see, here's one of those ones that would be a bit of an exception for me because that's a little more vertical than I like. I would have much preferred to see that move, would have felt more comfortable with it. So it went a little bit vertical. And once that ADX got above 40, so from that point higher, so where would that have probably been right here? Right around the 310 level this day here, which was the 5th, where it broke and climbed to 315. I couldn't have stayed in that one at that point in time, not with that ADX being that high and being above the positive directional indicator. There's just no way I could have done that. And so now you're starting to see a bit of consolidation, but the positive thing, if you're long this, is it is holding 320. You got a nice little descending triangle here, which that means nothing on direction. Don't let people get caught up in telling you a descending triangle is going to break to the downside. I've analyzed, nobody has spent more time analyzing data around triangles than me. I feel pretty comfortable saying that. It could break either way. It could break down or it could break up. But just because it's a descending triangle doesn't mean it's going to break down. That's just all marketing stuff. So it's caught, the 10-day moving average is caught up, it's consolidated, and it's a positive sign that it's held 320. So even though it's in a triangle, could still break lower, you would feel pretty confident that there's a possibility of it moving to the upside. And that's what Elliott would say. Elliott would say that's going to go higher. It's going to break to the upside. I think that you cover both sides of it, but definitely watch the 320 level. As long as you can hold that, then yeah, there's potential all the way up to 350. So the last one was
DraftKings. DKNG.
So we've talked about this one in our trade finder a lot. So a lot of people are obviously trading this. So the key here that I brought up from a fundamental standpoint, and we do take fundamentals into account, but it's not a big part of what we do. We have a basis, one of the confirming indicators, but we are technical traders. But when you look at it from a fundamental standpoint, you have DraftKings, right? The Super Bowl is over. March Madness is over. The events that people bet big money on are over, and you had this nice move to the upside. So it makes sense that you're going to have a correction. Now, the positive is it held above the 61.8% fib level, and we're moving back to the upside. So here's another one. I mean, a lot of these have been really clear cut as far as, and hopefully you took notes of your favorite stock and where the support resistance levels. 60 is key here. If it can get back above 60, then it could have the potential to run back higher to the upside here and possibly hit that wave 5 target all the way up at 85. But it's got to break above 60. So to be specific, you have to have a close above 60 with a follow-through day. So you have to have a close above 60 with a second day closing higher than the previous day above 60. And if it does that, then you look to go long the stock. If it can't break above 60, then you're very likely coming down here to 50, and probably not it may not take very long to get down there. So again, 50, 60 are the keys. This one's pretty easy to spot as well. So break above 60 with a follow through day could be a nice upside trade. This was fun. Really enjoyed this. Thanks, everybody. Appreciate it. And just to follow through with what John said, if you like this, if you want to see us do this stuff more often and even broaden it, please hit that like button. It helps let us know. Or hit subscribe. And then the next time that we're doing one of these, you get notified right away that we're popping on there. So thanks. We really appreciate you taking the time to spend a little time with us tonight. Look forward to talking to you again soon. Take care, everybody.